Time for Trading Nation today. Katie Stockton of BTIG is here to break down the charts on the S&P 500. And today, of course, we hit a record high. So the next question is, how much higher can we go?
So we're getting accustomed to those record highs, of course, not just for the S&P 500, but really a lot of the major indices here. And I think eventually it's going to be around the world. I think we're seeing really nice breadth behind this move and momentum as well. It's really very much a momentum-driven tape, and that's what we have to be mindful of.
Okay, so let's get right to the charts here.
So last summer, we saw a breakout from a trading range right here. The resistance was around 2135. When you looked at the width of that trading range, which is a very customary way of discerning an upside target from a technical standpoint, it projected to about 2400 with a time frame of several months, which of course puts us to where we are now in Q1 of 2017. So that 2400 was a very reasonable target based on the width of this trading range, or basing phase, if you will, for the S&P 500. It was a corrective period for the market.
So does that imply once we hit 2400, we hit some sort of resistance level, and therefore the next level is where in this range?
Well, it's not technically resistance, but just sort of an upside gauge. That's the best we have really from the charts now at new all-time highs, of course. We can look at the other major indices around the world for a gauge of resistance and potential upside there as well. It's at less than 3% at this point, which is amazing. When we assigned the price target, it was about 12% upside. So getting close to that, that's about where I would expect the overbought conditions to catch up with the market. Momentum still is really quite strong, so I don't think we're quite there yet. It is an overbought market, but not until you see that downtick in momentum do I take issue with that.
Technically, are the markets in better shape because we've been at sort of these record levels or close to record levels for more than a month now, and we really haven't given up? We've only moved and grinded higher slowly.
Yeah, I think it's a message from the market that it really is a momentum-driven tape, and that we have to be mindful of that and use those moving average-based tools to follow the market and just stay on the right side of those moving averages.
All right, Katie, great to have you with us.
There are several considerations to keep in mind when trading in the aftermarket sessions. First, there may be lower liquidity in the aftermarket than during the regular session. This can result in wider spreads between the bid and the ask, as well as clients getting partial executions or no executions at all.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.